Hi, welcome back. In this video, we are going to talk about trend, how to identify the trend and how to use that for our trading purpose or investment purpose. Apart from that, we will also see the momentum based indicators as well. So how to identify proper momentum and along with the trend so that we can make a better trading and investment decision. So we have covered earlier that most traders say that market is going up, market is going down. But is it really a uptrend? Is it really a downtrend? How do we identify that aspect? So it does not matter that that market is just going on one side, then you are going to say that a lot of people say that market is going up, market is going down, just looking at the chart which is moving up or which is moving down. So here you can see just it is moving up, just it is moving down. Rightly said that it is in a trend, but just in case it starts moving up here, is it a uptrend or it's just a short term blip? Now it is going down. Is it really a downtrend? Is it really a downtrend from here to here? Or we can think that no, there is a downtrend, but now that has been broken. So now it no longer is a trend. So that's what we are going to understand in this video. So just to understand, not every move is in a uptrend or in a downtrend. There are some consolidation moves as well. So when we say consolidation, we have already discussed what consolidation means. So consolidation means this kind of pattern, not up, not down. But now suppose you are in a market which is going down, and after that, suppose you are sitting today at this point of time, and after that you see market is going down. Is it still in a downtrend? We have to identify that aspect, and that we will identify through trend line and trend line breakouts. So basically, what is a trend? It's a sequence of structured events. So when I say structured events, we have already discussed, just to recap, we have already discussed if we are talking about higher highs and higher lows, then it supports uptrend kind of definition. If we talk about lower highs and lower lows, then that means we are in a downtrend. So once that trend pattern is confirmed, and we also mentioned that when it is going up, right? So it's not that we have to look only just for the consecutive days. So suppose this trend which was going up, now market has gone down, right? In these days you can see market has gone down. So does that mean that trend has been broken? No, it does not mean. How to validate that? We will validate that one through the trend lines, and secondly it can be validated through Elliott wave theory, which is our advanced course, and you can enroll in that as we have been talking about. Are you in the stock markets but still guessing your next move? I am from Uncover Markets, and we are bringing a complete solution for your stock market needs. Whether your portfolio is of 1 to 2 lakhs or 50 crore, we show you practical ways to enhance returns and protect your capital. You can take short, quick learnings you apply on the same day, or let us handhold you through long-term programs like Elliott Waves and Advanced Derivatives to secure your portfolio and generate alpha. And if you enjoy fast-paced option buyings, we have got you covered there too. So join Uncover Markets and rise in the markets. Thank you. So the simple concept is buyers are pushing market higher, then it is going to be in uptrend. And when sellers are pushing a market down, then it is going to be in downtrend. So here the sellers are pushing market down. Here the buyers are pushing market up. Here there was some kind of profit booking, and because of that we had to see the market coming down, and after that it has again resumed. So now what is a trend? Let's talk about quickly. We have already talked about higher highs, higher lows. Now let's talk about this piece of information. Every chart is a piece of information. That's why I am calling it as a piece of information. If you look on daily basis, then on daily basis it is not going to make higher highs, higher lows. It is not going to make lower highs, lower lows on daily basis. So suppose you see there is a trend kind of thing which has started. So suppose you are at this point of time and this much area has been covered by this chart. So let's break it down into different blocks, not only the days. One block is that, another block is that. We will try that we have equal timeline blocks. If we are putting 5 candles in that, we will just put 5 candles, or we can just look at the weekly charts as well. So now look at this. Here the high is higher than this high. Here the low is higher than this low. That means it's a lower high, lower low kind of situation. And overall, this is the trend because it is being confirmed on a larger time frame. So now we have got the trend confirmation. What a trader is going to look at now? There will be traders who will be thinking that, okay, Now the trend has been confirmed, but there will be some point of time when the trend is going to be broken. When I say trend is confirmed, I'm talking about upside trend as well as downside trend as well. So the same situation will happen. There are so many participants because of which the trend is down. Suppose in this case, a trend is down. There will be many people who will be just waiting for the opportunity when trend reverses and it goes up. Are you in the stock markets but still guessing your next move? I am from Uncover Markets and we are bringing a complete solution for your stock market needs. Whether your portfolio is of 1 to 2 lakhs or 50 crore, we show you practical ways to enhance returns and protect your capital. You can take short, quick learnings you apply on the same day. Or let us handhold you through long-term programs like Elliott Waves and advanced derivatives to secure your portfolio and generate alpha. And if you enjoy fast-paced option buyings, we have got you covered there too. So join Uncover Markets and rise in the markets. Thank you. So what kind of points they are going to look for? They are going to look for the points where they see that the trend line is broken. So here what we will do, we will create a trend line here which will just attach the top lines of at least 3 points. So here we have added so many points. So the trend line should at least touch 3 top points. So now these are the 3 top points, okay, of the candles. So this we can see is clearly a trend line. There will be many investors and traders who will be waiting that once this trend line breaks, we should go up. We should go into the buying zone. So that's how trend line functions work out. But trend line in isolation can be trend lines in isolation can be big illusion. So you can get lost in identifying a trend because every time you look at the chart, you will see that some trend is going on. Suppose you were looking at the chart here. You thought that trend is going down, but then it suddenly moved up and then you entered here and immediately after that trend resumed in the original direction. Similarly, for upside also there can be situations. So first let's create a trend line here. So let's first create a trend line here. So here is a trend line, right? So after that, once this trend line has been broken here, it has moved really up. It has really moved well. But the problem is with the trend line, sometimes, in fact, many times you spot wrong trend line. You spot wrong period of time when you have picked up the trend line. And once the failure of trend line comes, it is really a brutal failure. So we have seen if trend line fails, then it is really a brutal failure. So here also, if you can look here the trend line failed. We were having this, it was going down, trend line broken here, but then it was a brutal failure and market all the way went to this level. It could have gone to this level as well. We don't know. So you have to combine it with the complete theory which involves higher highs, higher lows, trend lines, and then some of the indicators which we have, RSI, moving averages. All of those once combine and provide a single directional view on a security, then only you should be trading it. Hello and welcome back. This is part of our premium course where we are going to cover 2 aspects mainly. One is the trend line on the advanced level, second is the channel with the trend line, and third will be the momentum trading. So let's talk about all of these aspects and see how they work on the charts exactly. So let's just talk about our trend once. Let's recap. So what is a trend? Trend is something where we see that. So now let's look at this chart first. What is a trend line? So trend line is the way of observing whether the structure is being respected or not. So in a simplistic way, we can see that this structure which was going down is being respected with one line which we call as a trend line. So basically what we are doing here, we are connecting lower highs because this is a downtrend. So we are connecting lower highs and we are creating a trend line. Now let's just expand this one. Here we can see there are some lower lows as well which can be connected and then it becomes a channel. So when market is moving in a channel, we should not touch it. This is a channel which has been formed roughly and this channel market is moving up, right? And suppose this channel breaks down below, then there is a big risk open for the market to go further down. But when this channel is broken on the upside, then there is a good chance that a lot of traders who were thinking that let's not participate in the market because it was in a channel phase. So now let's move into the market, and so they will think that let's move in the market because market may move up. Now what kind of channels can be there? So this is a falling channel. you can see a channel could be a consolidation channel, complete consolidation channel. So here this is a consolidation channel, you can see. And here also when we have broken it, then market has really performed well. But as usual, there are always the trouble. So trouble is that sometimes there are false breakdowns, false breakups as well. So we have to be aware of that. We have to see, because once we have the complete technical analysis understanding, we will see. So here what has happened, it was broken here, but after that we can see there was a double bottom kind of pattern which was formed. So in earlier videos we have covered those importance of double bottom, double triple bottoms, and importance of all of those things. So we can see here a bottom has been created, and that's where it then again came to the channel. Once it has come to the channel, there is every possibility that sooner or later it will go out of the channel on the upside. So this is a consolidation channel, this was the falling channel, and now let's talk about another channel. Another channel would be rising channel. So here if you look at the graph, look here, and then if you look here, this is a rising channel, and when this channel breaks down, then we will see that there is lots of opportunity. But again, you can see if I just extend it, this is a better channel to create. Are you in the stock markets but still guessing your next move? I am from Uncover Markets, and we are bringing a complete solution for your stock market needs. Whether your portfolio is of 1 to 2 lakhs or 50 crore, we show you practical ways to enhance returns and protect your capital. You can take short, quick learnings you apply on the same day, or let us handhold you through long-term programs like Elliott Waves and advanced derivatives to secure your portfolio and generate alpha. And if you enjoy fast-paced option buyings, we have got you covered there too. So join Uncover Markets and rise in the markets. Thank you. So now the channel got created from here. Suppose I was at this point of time. Then what kind of channel will I create? I will create a channel because based on this graph, because I will not have this graph at that point of time. So suppose I am talking about this point of time. So at this point of time, what I will do, I will create a channel which will be like this, right? Because I had this point available with me, this point available with me, and this point available with me. And on the lower side, I had this, I had this. So all of these points. So I could have seen that there was a channel in making. So when there was a channel in making, we will extend that channel to the upside. And now you can see that channel got broken here. And once it has broken, it has actually gone up. So this is the volatility we will expect market to provide anytime. But we should not be worried about it. And how to learn about that volatility, how to sense it and be comfortable when market is crashing because of just volatility. So you can see market is actually crashing here, but it has crashed for a very short term period. But actually it has crashed. So should we be really worried about it? So if you don't want to be worried about those short-term blips in the market, then join our Elliott wave theory, which will show you exactly how much you can expect from the market to go on the upside, how much you can expect market to go downside, all of those things. So now you can see we have talked about 3 channels. One is rising channel, right? One is falling channel, and one is sideways kind of channel. So importance of that is once the channel is broken out on either side, then we can expect a big move. And just in case market again gets into the channel, so market has just suppose fallen below this channel, then we have to quietly observe if it is making some other technical indicator like double bottom kind of thing, and if it is moving back, then market is going to go higher up, because here a very solid bottom has been created by the market. And one very important aspect you need to understand, we have talked about breakouts, we have talked about false breakouts, right? So once the channel has been broken by some candle, here, like see, so we have to see the size of that candle. After that we have to see whether the next candle is supporting the move. So here you can see this candle broke out really well, and after that we can see there was another candle which was not a negative candle at least, so that means it supports the up move. So that's how we validate. Now we are going to talk about momentum aspects of the trading. Now let's talk about momentum based breakout strategy. So the breakouts work best when backed by the momentum. So what is the momentum? We will just discuss that. So momentum, when we talk about momentum, so it's slightly away from the structure. So structure creates the opportunity. We have been talking about what is a structure, like a lower low, a lower highs, higher lows, higher highs, higher lows, lower highs. All of those things are part of structure, but structure creates the opportunity, but momentum defines the follow through. Are you in the stock markets but still guessing your next move? I am from Uncover Markets and we are bringing a complete solution for your stock market needs. Whether your portfolio is of 1 to 2 lakhs or 50 crore, we show you practical ways to enhance returns and protect your capital. You can take short, quick learnings you apply on the same day. Or let us handhold you through long term programs like Elliott Waves and advanced derivatives to secure your portfolio and generate alpha. And if you enjoy fast paced option buyings, we have got you covered there too. So join Uncover Markets and rise in the markets. Thank you. So here, when we have broken this channel, you can see this is the momentum and after that there is a follow through. So this is confirming the momentum. Here again, it went into the channel, but it is breaking again and after that, see the smart follow through. And after that, definitely we are going to see some profit booking. So people are coming and selling it, profit booking. And after that again, it is moving on the upside. So that's how we have to see the stocks. So obviously not all the breakouts are equal. Some of the breakouts move decisively as we have seen in this example and some of the breakouts almost failed immediately. So see here, if you look here, this was the breakout from that channel. But after that you can see if it was a real breakout, then next candle would have been lower. But what happened? Next candle here was just started going up. So that means it was a false breakout. And second aspect with the channel is that so now you will also appreciate the fact that when we talk about momentum, we are not just talking about the movement, a quick movement. We need to see that quick movement is also supported by high volume. You see here when this channel formed and it was broken here. So you can see the kind of volume here. So much more volume. Earlier the volume was so low, but immediately it increased. So that means this channel breakout was having complete momentum. What is a momentum? Simply means that a lot of traders are buying into the same direction. That is the momentum. So that's where a lot of traders just bought into this direction and that is confirmed by the volume. And that is what we mean by a momentum. So momentum got confirmed here. Now here, look at this one. Now, if you look at this crossing here, this one, when it was breaking down, lot of traders were not involved because see, this is just a small volume. It was not breaking with a big volume. But next day, when market went up, you can see here this candle, then the volume was high. So that simply confirms that so volume in the previous candle when it was breaking down was actually low and that was a false breakout. So this is confirmed by volume's relevance. Now, if you want to confirm the momentum and real volume, right, and real momentum when breakout is happening from the channel, so we can also confirm the kind of candle which is being formed at the breakout point. So at this point of time, this is a big candle. That means a volume is high, of course, and this is a big candle. So a lot of people want to buy at this point as well. That's why it's a big candle. And suppose there was a candle which was having a bigger wick. So we explained what is a wick. This is a wick. So suppose this was a candle where it was like this. Then we would have mentioned that market tried to go up but then tried to go down. So this would have created a confusion. But when we have a big candle during breakout, so that confirms that the direction is fine and direction is with momentum. So that supports our thesis and we can draw our confidence to get into the trade. So you just need to understand three things. So what is a breakout? Breakout is an event. So breakout is an event on the chart. This event happened on the chart. After that, are we having acceptance of that event? Suppose you go to an event, then you want yourself to be accepted in the event. So is this event being accepted? Yes, you can see a green candle here. It is being accepted. Sometimes it happens that it could be a red candle, but if you look at how the candle has behaved over the day, so you can identify whether you are getting accepted, that breakout is getting accepted or not, right? So first is the event, second is the acceptance, and then third is the momentum, which is a fuel. So after that, there is some to and fro here going on, and after that, there is a fuel coming, right? And after that, the market has boomed. So momentum is kind of fuel. Event created, event accepted, and after that, we are getting the momentum resumed in the market, which we can validate from the volume as well. So that is the fuel, so that will sustain the market in that particular direction. So now you can adopt different approaches towards breakouts. Are you in the stock markets but still guessing your next move? I am from Uncover Markets and we are bringing a complete solution for your stock market needs. Whether your portfolio is of 1 to 2 lakhs or 50 crore, we show you practical ways to enhance returns and protect your capital. You can take short, quick learnings you apply on the same day. Or let us handhold you through long-term programs like Elliott Waves and advanced derivatives to secure your portfolio and generate alpha. And if you enjoy fast-paced option buying, we have got you covered there too. So join Uncover Markets and rise in the markets. Thank you. So first approach is breakout continuation. So in that breakout continuation, what we do, we enter during or just after the strong breakout, right? So as we explained, we can enter just after the breakout. And when momentum is clearly visible, then we will stay in that one, right? And suppose we break down below this channel, then we come out of the market. Second approach will be that wait for a minor pullback. That could be risky. There might not be any pullback. So suppose we have got this green candle, but after that immediately green candle and then green candle, it quickly moves up. So the second approach which we are saying that you wait when the market has broken out of the channel, you wait for the pullback. Market takes a breather, gives a pullback, and then you enter. So this is the second approach. And there is another third approach which is most rewarding but most risky as well, as usual. What you do when market is just touching this, right, breakout level, so enter your positions here and you can just put the stop loss below this channel. So once market moves up, it will really give you a very handsome return. You are not going to lose any returns. And just in case market goes down, then once your channel is broken, you just have to come out of the market at this stop loss. So this is the most rewarding but most risky strategy as far as channels are concerned. So now there is some exercise for you. You go into any of the charts and on those charts just check where is the momentum building up, where is the momentum going down, and secondly then you also build up the channels and the trend lines and then see if channels and trend lines are getting broken, at what point they are getting broken, and if they are getting broken, are we looking at a real breakout or a failure of the breakout. Do this exercise for the upside as well as the downside of the market and you will learn a lot of things. Thank you.